All right, welcome everybody. Doug here with the LincolnList.com. I want to welcome you to another weekly edition of Stock Market Mutterings for the week of July 30th. And you're going to want to hear this mutter because right now, the way this market's behaving, which is like an 8-year-old on Monster Energy drinks, you're going to need to be muttered to right now because the way this thing closed out Friday was just nutty. We're really starting to see a lot of fades. We're starting to see a shift in behavior. Now, some of this, I think, goes back to Netflix, and we talked about the FANG names. We talk about these things every week. Oh, pull up Netflix. It started last week, and you had a couple of these other FANG names reporting this week: Amazon and Facebook, Google. I think Google might have been the next one. I can't. It's been a long week. It's been an exhausting week. Anyway, the point I'm trying to make is a lot of these are up a tremendous amount throughout the year. They've for the last couple of years they've made monster moves. I mean, look at Amazon just here since April, since their last quarters, 1,400 to 1,800. You saw a similar move in Facebook. You've seen that in Apple, and really Apple's kind of the last to report there. But when you do this much, especially for you new traders out there that are just kind of learning how to trade, each and every quarter that goes by with a momentum stock like this and a stock that's under accumulation, they're going to have to hit these marks, and they're going to have to continue to grow at a rate that, Wall Street analysts and estimates, they have to hit these targets. The higher the stock goes, the more perfect a company needs to be. It's not that they're a bad company, they're not going to make any money, or they're not going to be profitable, but, Wall Street loves growth. The one time General Motors was a growth story, and Walmart was a growth story. And everything goes through a cycle because at some point a company can only grow so fast and they'll eventually just taper off and reach a plateau, and so does the stock. So the point in all of this is you kind of got to this point, I think, here where these things got a little overvalued in the short term and their numbers just weren't quite what they should have been. Especially something like Facebook just got absolutely obliterated in their earnings. Now, this to me, when you consider that the S&P has a lot of these in it, you're going to see the market get hit a little bit across the board here. If the techs start to pull in, you're going to see that kind of trickle down. That's been the big sector. We talked about that. Retail names and tech names have kind of led the way this year. There's been a lot of other stuff that's sold down and such, but we're starting to see that dig in. We also had some tariff news. And we also had a little bit of GDP. And on Friday, it just didn't seem like maybe this changes come Monday. But one of the things that we have been talking about for so many market mutterings is this 280, breaking out through this 280. And you finally did that. And you really only got one solid day up there. And after that, Thursday and Friday, it just started to fall apart. Yes, it kind of hung up there on Thursday, but you could tell it just didn't want to stay up there. It's like every kind of rally got stuffed. Every stock that was breaking out got sold off. Some things were just falling over. And then Friday, when this GDP number came out, I believe it was already priced into the market, and it didn't beat expectations, and everybody just kind of threw their hands up in the air, and down she went. Again, that doesn't mean that Monday it won't retrace itself and go back up. But what we're seeing here is a much different landscape than we've seen for the last year or so, and that is, yes, the dips get bought, but they're not getting bought with the same enthusiasm across the board. They're not rallying with the same enthusiasm. And they're certainly putting a lot of shakes and fakes and all kinds of just erratic moves. I mean, I think you kind of saw that too with Amazon with a big $70, $80 drop and then $170 retrace. I mean, that's just absurd amount of movement in stocks. So as we go forward, we just basically blew out all of that parabolic that came in on Wednesday. It's gone. The breakout didn't hold. It's gone. And now you're back down here. You're still the number's still 280. We're working with that. It's either going to hold that level, which is now the 10 moving average, or just, 10 moving average is slightly above that, or it's going to start working its way down to the 20 moving average in some of these lower areas of 278. We'll see how this thing plays out at the beginning of the week, but I think the way that it closed here, it's leading me to believe we're going to start out the week with a little bit of selling, but that may not. If it continues to get aggressive, because Friday was kind of aggressive. You had a lot of volume right there selling out into the close. I don't think anybody was really excited about holding into the weekend. You got to think maybe the 50 moving average in some areas down here at 277 may ultimately get touched. So that's just my thoughts there on the market, but who knows? It can turn around and just make me look like a fool and start ripping again to all-time highs. So Kind of that's where we were a few days ago. We were like sniffing all-time highs, and now we're already back down to 280. So back and forth action. Govern yourself accordingly. Speaking of stocks that you want to look at, definitely want to take a look at this Facebook. It's not going to be for everybody right now, because what happens is just look at Netflix for a guide. When a stock gets beat up like this after earnings, it normally takes a few days to just get everybody out. You got to understand, big institutions and big holders of the stock are they're not selling their position in one day. They're kind of selling it every single spike along the way, and you're just going to constantly get. It's not unable to rally here. It just barely on Friday, just barely held the lows right here from the gap down lows when it missed. So this is really your number, is this 174 area. It's 173, 174. If it does not hold that area, then you've got to think this thing ends up coming all the way down into possibly the 160s. It's hard to tell. It tried its best, as I said early on Friday, to do something. It was pressing up at 180, and then it was just a sell-off after. And again, sometimes these things need a few days to iron themselves out. There's a definite trade here. With a stock like this, though, it's going to go back and forth, and sometimes it's going to be a long if you're a day trader, and sometimes it's going to be a short. It just really depends on how this thing operates. But with this kind of volume going through what it's going through, you're definitely going to see wider ranges out of this, and there's always going to be trading opportunities, so kind of put it on the list. Now, because of this, some of these stocks went from tight flag breakouts to flag breakdowns. One of the ones I'd like to look at is possibly this TTD. Now, this is another stock that's just been immune to anything that's been going on in the market. This thing was a $50 stock, gaps up, runs all the way to damn near $100, and does the same thing. It breaks out, and then it spends the next 4 days just fading, and now it's sitting here on the 50 moving average, and you can see real close if you look here on the daily chart. It's 87.60s, a couple of wicks right here. Again, if we see selling to start the week and you continue to see weakness, and remember, if you're new, weakness is when you're just having rallies that nothing stays up. It doesn't gain traction. Every breakout fails. Every rally fails. Every kind of momentum just gets jammed with sellers. You got to watch for those kind of moves. If you see something like that and then this 87.30 area gets taken out, I mean, there's quite a bit of room. Also, keep in mind, a lot of these stocks mentioned, they got earnings coming up here, so it always depends on the day. I'm not going to play anything through earnings here, but as these things go up, I think you're going to see a different tempo this time around because of what happened with Netflix and what happened with Facebook. I think you'll see a lot of people reluctant to buy. A lot of these stocks ran up into earnings, and people were buying right before earnings. I don't think you're going to see that anymore because they probably got spanked pretty hard. So watch TTD there for it. Same could be said with GRUB. There are some earnings winners out there that have done phenomenal jobs, and this was a really good move right here on this gap up day. But you got kind of a little ahead of itself. Nice top, if you want to call this an inverted hammer. Just keep this area over. 130 goes, this thing's going to probably back test its way a little closer to 120. Again, if the market continues to press lower itself, and we see weakness, and you can look for a lot of these stocks to kind of roll over a little bit. And the last I think I want to put on here is BABA. This thing, you want to talk about weird. This thing was weird. We were on this thing about a breakout here at 193, and it does a really good job of breaking out. And it's like, this is the biggest day BABA had. I can't remember. This was a pretty big day back here. But this is like the biggest flyer, one-day flyer, just kind of like out of nowhere here. This thing just goes from 190 to 190. It's like an $8 move one day. Nobody sells a share the entire day. This thing's just a monster. And then same thing, next day it gaps down and holds. And then Friday, there it is. It's all gone. So whoever bought on this day, if they're still holding, everybody's underwater. So this shows you how you got to take your profits sometimes. You're in this business for profit, and things can change so quickly. And I think you're seeing this kind of behavior, and that's really what I'm highlighting, is this is not what you saw in 2017. You didn't see this back and forth types of behavior. So the market's kind of going, even though it's still leaning a little bit bullish, it's going through an identity crisis here where it's searching and feeling things out. And you got a little bit of volatility really starting to creep back in. I like BABA. If we start out the morning, there's always something I haven't talked about yet. And that is if we start out Monday with a big flush, like it's just an overnight panic of some sort, weekend panic, and then this market gaps down and you really start to see a lot of selling. Boy, I'd be interested in this BABA, buying some of this BABA, maybe even buying some NVIDIA and stuff down there at the bottom, but we'll see. Anyway, I want to thank you guys for watching this video. Nice to do another market mutterings. I know for some of you, you're seeing a kind of market climate environment that you haven't seen before. Don't sit there and try to figure it out the hard way. If you're struggling, come visit us. We'll do our best to take care of you and kind of show you what you need to learn about how to trade stocks in any kind of market. Until the next market mutterings, trade well this week, guys. Take care. Talk to you then.